What's up, everyone? This is Tony with JRNYcrypto. So today we have some very bad news circulating and causing panic in the markets. We're down 10% across the board, basically, and we could move down even further, but I do think this is only temporary and we will start moving up again. So we're going to get into all this as well as this bad news and why I believe it's complete idiocracy. So before we get started, I do appreciate if you guys like the video, subscribe to the channel if you haven't already, and hit the bell to be notified when I release new crypto videos. Alright guys, so as I've been warning, we never know what's going to happen in the short term. There can always be bad news that breaks and causes mass panic and huge sell-offs, causing a major market dip like we are experiencing today, pretty much down 10% across the board here. And we were just starting to look bullish again. I'm still bullish in general for the long term, but this bad news can definitely make the markets crash even more. And this bad news is going to be the fact that Janet Yellen is trying to tax unrealized capital gains. This tax proposal is just the most idiotic thing I've heard this entire year. So Oaktree's Howard Marks says this tax proposal in the US makes investing less attractive, which means less money in the markets, more people selling off. So taxing unrealized capital gains is not practical and will hurt sentiment among investors. Unrealized capital gains refer to the theoretical increase in value of assets that an investor is holding onto. So as you guys can imagine how stupid this is to try to tax unrealized capital gains. So let's say I'm holding a small cap cryptocurrency that has huge potential. It ends up going up 50x this year, but there's still not a lot of liquidity in this altcoin. At the end of the year, I would get a tax bill for that 50x, even though I didn't cash it out. So somehow I'm going to have to come up with the money to pay profits on this investment that I haven't even cashed out on. So for most people to get the money they need to pay this tax bill, they will have to sell off some of their investment. This will cause a huge crash all at once. And let's say the altcoin goes down at 90% overnight. I would still have to pay the tax bill on that 50x, even though the investment is now down 90%. So as you can imagine how unrealistic this is to try to tax unrealized capital gains. This will destroy not only cryptocurrency, but other investments and holding other assets as well. So just ridiculous. I'm pretty sure 99% this won't get passed. So we also had some bad news from Yellen yesterday as well, basically her saying cryptocurrency is mainly used for illicit financing, which is just not true. As we can see in this article here, large banks launder more money than the entire Bitcoin market cap. And you can track Bitcoin and cryptocurrencies from wallet to wallet. You cannot track cash like that. And big banks launder more money than all of cryptocurrencies combined. So this is just ridiculous. She's focusing on this. I really think she's just, this is beyond her time and she just doesn't understand this. So she is taking a focus on cryptocurrencies. That on top of this news of her wanting to tax unrealized capital gains today is just a double whammy of bad news. So Charles Hoskinson had some very important things to say about this. I am going to play some short clips from his video and then we will discuss what he's saying.
There are two tax policies in particular that are new and never been done before in the United States that could be catastrophic to the cryptocurrency industry and to the entire startup industry of America. And I wanted to bring them to everyone's attention. And if they survive committee and they actually get to a point where people are thinking about voting on it, I would love for people to write their congressman and please express extraordinary dislike and anger over it. First off, there's this idea of a wealth tax. So the basic concept of a wealth tax is that the government somehow, some way will be able to assess how much you're worth. Who knows how, but they'll take a look at all your assets, liquid and illiquid, tangible and intangible, form them together, put a price tag on your head. And if you happen to be worth too much money, they'll just simply say, okay, every year we're just going to tax you at some rate, a few percentage points or something like that, regardless if you made any money at all. You could be in prison and have no earning potential at all, but still get a tax bill every single year if you happen to be worth too much. I believe this is theft at the highest level because the whole point of taxation is the government is the regulator of the markets and ensures fair commerce. So they're giving us a surcharge to that. The concept that just as a condition of breathing, every year the government can just come and take money from us because they think that we have too much is an incredibly dangerous and very damaging situation. The other thing is that any person who's high net wealth will just simply not reside in the United States or offshore all of their assets to ensure that they don't get captured in this regime. So it's neither productive nor in practice will it be effective. And what it's going to do is create a huge offshore industry specifically to hide assets abroad.
All right, guys, so number one is the wealth tax, which, as you guys heard, this is just going to force people to leave the country or deal with offshore accounts. And basically, it's going to ruin the economy as we know it. Everyone wealthy in America is simply not going to comply with this, and they're going to get away from this as quickly as possible, which just removes that wealth completely from the United States. So not only did that business and wealth leave the United States, but it also is removing the taxes that the United States would be making on that. So this is actually going to hurt more than help, in my opinion.
The more damaging to startups is this concept of taxing unrealized capital gains. It absolutely blew me away that the Treasury Secretary nominee, Janet Yellen, apparently says she's going to consider it. And this is actually being taken seriously. It's a joke. It's an absolute joke. And we need to understand what taxing unrealized gains means. Let's say you're an entrepreneur and you start a business and you have very little capital and you go and get some investors in that business. So they go and put some money in and you suddenly have a valuation. So that worthless stock that you have now, let's say, has a $5 million or $10 million valuation. Most startups at that valuation have no assets. They have not a lot of capital. You're probably a poor entrepreneur. You have no means to do anything. But you may own 70% of that company. So you've had an unrealized capital gain of millions of dollars. And so at the end of the year, the IRS will say, well, you've just had an unrealized capital gain of, let's say, $7 million because you own 70% of that company valued at $10 million, when it went from nothing to $10 million in valuation. Here's your tax bill. Please pay us $2 million. Where do you get the money for? There's no market for your stock. It's completely illiquid. You have no money because you're a poor entrepreneur who's just starting something and building something, but you've just been taxed $2 million for an unrealized capital gain. Any asset, let's say you happen to discover that one of the paintings in your attic that you've just acquired not too long ago at a garage sale is now worth $50 million because it's a long lost Picasso. The IRS will say, oh, well, you bought it at $5 and now it's worth $50 million, even though you haven't sold it. You haven't even tried to sell it. You don't even know if it's actually worth $50 million. We're still going to send you a tax bill for $10 million. Here you go. Good luck. How is that not theft? It's an extraordinary thing, and it's going to destroy the entire startup culture of America if such a thing gets pushed through.
So number two is taxing unrealized capital gains. This is not only going to be bad for crypto investors, but stock investors, startup companies, anything that has an evaluation, you're going to have to pay tax on that, whether you made money from it or not. And how you're going to come up with that cash is going to be impossible for most people, especially those that are just getting started. As Charles stated, small startup companies, if they suddenly get a huge evaluation, how are they going to come up with millions of dollars cash to pay that bill? They're not going to be able to, and they're going to fail because of this.
In relation to the crypto markets, many of you likely have extraordinary, because of the recent bull markets, capital gains. So let's say that you invested in a small cap cryptocurrency that doesn't have a lot of liquidity. And that cryptocurrency goes up 100x by the end of the year, but it has very little trading volume. The IRS will say, well, congratulations, you got 100x ROI, so here's your tax bill. And then it collapses the very next day, 90%. You will still be taxed as if you got 100x capital gain, even though you didn't realize it. Think about that. This is literally what is being proposed. Taxing unrealized capital gains. You might ask, well, what happens if it goes in the opposite direction and the markets collapse? Do I get a credit or something? No. So I think these are among the two most dangerous tax ideas. Who cares about the rates? They go up, they go down. You know, you just deal with it, you optimize it, you pay your fair share, whatever. Okay, that's a debate, and we should have that debate about what the top rates should be. A wealth tax is a massive invasion of privacy because it means every single thing you own you must declare to the government. Every single thing you own, the government must decide how much that's worth. And if you have too much, the government will just simply send you a bill every year, regardless if you lost money or made money. And the taxing of unrealized capital gains means that no one can be an entrepreneur anymore unless they're independently wealthy and can afford to pay millions of dollars in taxes as their company increases in valuation.
So relating this to cryptocurrencies, basically it's going to cripple the entire crypto space if this passes. This is why it's very important for us to make a stand and voice our opinions if this does go to vote and write our congressman, which, like Charles said, he will update you more on this, on how to do this when the time comes. I really don't think this is even going to make it to vote though, but it is good to understand what this entails and why they would even be considering it. So like he said, if you have 100x on an altcoin and you didn't sell it at that peak price at the end of the year, you're still going to get a tax bill on that 100x profit. And then it's most likely going to crash because people have to sell it to get the money to pay that tax bill. And then you're still charged on that huge profit, even though you can't sell it at that price anymore because there's not enough liquidity. So Biden's only been in office for a little over a day now, and already there's mass panic in the markets. It makes you question how things are going to play out the rest of the year. So I don't think these things are even going to make it to vote, but it does make you question who's in power and why these considerations are even making it to mainstream media. Just ridiculous, in my opinion. Anyone with common sense knows this would destroy the economy and the US as we know it.
And it absolutely is malpractice at the highest levels of the economy for people to even entertain these ideas. And I truly hope that they die before they're brought for a vote. Harris is the deciding vote. There's an actual possibility now that these two ideas could actually reach a vote and be decided on a 50-50 split. If that happens, please get politically involved if you're an American. I very rarely ask people to get involved in things, but this effectively shuts my country down for business. It will end the entire startup community, and it will devastate everybody's financial privacy. And an army of accountants will now be employed by the IRS to decide how much everybody has, and you have zero privacy about the things you own. You must declare every single asset to the IRS. That's not America. That's not sensible policy in any sense of the word.
So it's pretty disappointing that these things would even be considered. This is just not the US, as Charles Hoskinson stated, and basically it's going to make it impossible for entrepreneurs to start up new companies and things. Only the rich will be able to afford it. The tax bill you'll get every year, creating a startup or doing anything, having any assets is just going to be ridiculous, and only the rich would be able to afford that. So I'm guessing even more bad news is coming based on just the first couple days of this new administration. We're already down around 15% in the markets, and this word of this is just going to keep spreading. So I am hoping this is a temporary dip and that we do start recovering and moving upwards from here. We do have a lot of major things in the works still, like we talked about yesterday with BlackRock getting into Bitcoin futures. So a day of really good news followed by a day of very bad news. Of course, I don't think this will ever make it to vote, but you do have to question the people that are in power because of this. So if you're thinking about selling because of this dip in this panic, just keep in mind the potential cryptocurrencies still have in the long term. So this post here was in May of 2011. Greg says, "I wish I had kept my 1700 Bitcoin at 6 cents instead of selling them at 30 cents. Now they're $8. Just insane." So he had 1700 Bitcoin, he bought at 6 cents per Bitcoin, and now Bitcoin is $30,000 per Bitcoin. So long-term holding and dollar cost averaging does have its benefits for crypto assets that are not going away, like Bitcoin, Ethereum, and many others that are developing. So I'm still very bullish on cryptocurrencies for the long run. We still have so many things happening. We have PayPal launching merchant payments using cryptocurrencies, which is going to open the door to millions of merchants accepting cryptos as payment for the first time. Just massive in my opinion. So this is a major shakeout. I do think whales are taking advantage of this as well, trying to crash the markets with this bad news to try to get a much lower entry as well. So there is manipulation that does happen based on bad news. There's people that wait on this type of stuff, So we have to keep in mind that Biden is going to be printing trillions of dollars in 2021 alone. There could be more stimulus packages coming, and we did talk about universal basic income coming into play in the near future as well, which is just going to continue causing inflation to spike. This also brings more demand to holding assets like cryptocurrency. So it's very important to understand that big market dips like this can happen at any point with any bad news that arises, and then whales can manipulate the markets at the same time to get lower entries. This happens all the time, especially with cryptos being very volatile right now, being up so much in such a short period of time. That means just the opposite can happen just as easily as well. So that's why I always talk about dollar cost averaging, because spreading out your purchases is much safer than going all in at one peak price. So I hope you guys found this video useful. If you did, please like the video, share this video with friends and family, comment below as well. I do appreciate that, and everything helps the channel grow. I will be doing another video tonight on other important topics. So again, thank you guys so much for watching, and I'll see you guys in the next video.